The market has taken a hit and stocks are tumbling, right? But every fall comes as an opportunity for us. Hi, this is Anik Mitra. I am a SEBI registered investment advisor. In today's video, I'm going to reveal some of the cheapest stocks across various sectors that could be worth watching after this market dip. So, without wasting time, let me take you into my screen and let me show the competitive stand of various companies in respective sectors. But before discussing about the stock, I have a disclaimer that I do not have any buy, sell, hold recommendation with this video. I do not give any buy, sell, hold recommendation through the video or any platform or any open platform. Whatever I'm going to discuss today, this is just for knowledge sharing. This will give you some clue, some hint to do further study, or let's say filter out your study. It's an academic purpose and don't take it as a buy, sell, hold recommendation. So let's come to my screen. So I'm going to share sector wise as I have already told you. The first segment which I'm going to discuss, this is the tire sector. In the tire segment, after this fall, JK Tire looks the cheapest one among the pack, followed by Apollo Tire and Seat. So JK Tire, we all know that it is one of the three large players in this particular segment, 3-4 large players in this particular segment. So valuation wise, it is cheap enough at this point in time. But why I am saying just because of low valuation, one should not enter into one particular stock. That is a rational. I would say it's a rational, means valuation cannot be one rational for buying, only rational for buying a stock, because there are very like many stocks in the industry, in all industries rather, in all industries, which never, like despite having low valuation, it never performed. So there must be some driver to drive the profit, drive the top line, drive the profitability of the company, right? Now, why valuation is low? What is valuation? If we are doing price to earnings is nothing but your EPS and the company, your current market price by your EPS. That is your price to earnings. That is P. Now, current market price is the nominator and numerator, and denominator is your EPS. Now, if you're like how P can be low, just try to understand how P can be low. Price to earnings can be low because of two factors. One may be due to the numerator, another one may be due to the denominator. Now, numerator here is the price. If price falls and the denominator remains same or changes little, less than the price, then you will find that yes, like the PE has fallen, right? Another one aspect is, let's say current market price is stagnant and your bottom line is, your EPS is growing. In that case, if growth of EPS is more than the growth of the price, then your PE will again fall. Correct. Either your top numerator has to fall or your denominator has to rise. Now, preferred condition is your EPS should rise. This is the preferred condition. Now, along with growth in the EPS, if market price falls, what happens usually in case of market correction? People hunts for good stocks. Good stocks means fall is across the board. Now, if the bottom your EPS, the companies which are known, which are where there are factors to drive your growth, where there are factors to drive the EPS, those companies are always preferred companies amidst this fall. Now, it can be the known companies, or there may be various new companies who have started doing well in last few in the recent period of time. That is also possible, that some new companies who are doing well made this type of price correction. So it's an opportunity for that kind of companies as well. Now, as I have already said, that price has fallen, and or uh, your EPS rose, and that is why I was saying, like, if due to correction, due to fall across the board price has fallen, and EPS has nothing to do, in that case you will not get the despite having favorable PE, despite having low valuation, you will find that these companies are non-performer, always non-performer. Anyways, let's move to the new next segment. Now, if we look at this tower segment, although companies like all these companies are not in from the same segment, like KEC International is a project implementation company. Indus Tower, yes, they are also there in the telecom segment. KEC does in the transmission segment, and many other segments as well. Uh, so comparison is not correct, but Indus Towers valuation wise, Indus Towers is cheap enough. But I don't know who is the means whenever you are looking at the PE, that means it's a relative valuation. Relative valuation means it must be compared to someone else. I don't know whether any other tower companies, although no one is listed, any other tower companies are quoting at even lower valuation. But yes, apparently looks at lower valuation. This is the textile segment, and there are many names in this particular segment, many textile companies from this particular segment. I can even make it bit larger. I'm not very sure as now it is happening. Just a moment, sorry. Okay, so I think it is better visible. So there are chunk of companies in this particular segment, but you will hardly find any known name out of it. Now, many of these companies, like as I said, textile, many, like most of them are textile cotton mills. Means what I mean to say, yarn manufacturers. Now, yarn manufacturers has been facing a trouble for quite long time, and that is why, many of them are non-performer. Many of them are non-performer. So just at getting attracted at the valuation, don't jump into a particular company. You have to know why this valuation is cheap, and then only you have to take a call. In this particular segment, one company is Vardhaman Textile, quoting as reasonably low valuation, which is a known company, means a popularly known company. Vardhaman Textile quoting at 14x to its Q3 FY25 EPS. Kitex Garment is quoting at 28x. KPR Mill quoting at 36x. Gokaldas Export is quoting as 39x. So there are many other companies at various valuation, but these are the companies which are worth mentioning. KPR Mill and Vardhaman Textile, both of the companies are right in their in the entire value chain of textile. So Vardhaman Textile is a predominant player in the yarn segment, and KPR Mill is a predominant player in the uh, garment manufacturing segment. Vardhaman is also present in other segments. Very important segment for Vardhaman is uh, क्या बोलता है garment, sorry, this is yarn, then fabric. The fabric is also very important segment for Vardhaman. They are also present in the garment segment. So in the man-made textile segment, you can have a look into the company called Filatex India. Filatex is quoting at 14x, and rest all are not that important. Why I'm saying, because let's say I can see Pashupati Acrylon. It is quoting at 11x. Zenith Fiber is quoting at 12x, but I'm not very sure of how these companies are placed. But Filatex is worth looking, worth mentioning, because this is a known company and have significant presence in the market. But yes, true that Filatex is non-performer for quite long time. Entire man-made segment could not perform well in this particular in last 2-3 years. Although Century Enka is trading at the same valuation of 14x, still I would say it is also not comparable, exactly not comparable with these companies, because Century Enka belongs to a completely different domain. They are also क्या बोलता है कि मैनमेड फाइबर मैन्युफैक्चरर, बट दे आर बेसिकली नाइलॉन मैन्युफैक्चरर, नॉट गारमेंट. दे आर a part of their business is garmenting, but rest whatever their product line is, that is dependent, that is the nylon fiber, and they are very much dependent on caprolactam. So the spread of caprolactam and caprolactam price fluctuation impacts the Century Anchor's performance quite a lot. So these are few things we need to have a look. In the textile machinery segment, you can see all looks very expensive. LMW is the known player, looks very expensive at this point in time with 140x. We know that Lakshmi Machineries, it had a very prolonged performance history, but now it is quoting at reasonably high valuation. Stovek is quoting at 38x, cheaper than LMW. Mira Industries, I'm not very sure about this particular company, quoting at 16-17x. You have to deeply study in the company and take a call. In the sugar segment, sugar is largely an underperformer for quite some time. Now, whatever the outlook has been given by Ministry of Agriculture, that looks good actually. Like for various crops, the estimated production, the second estimate has been given by the Ministry of Agriculture, and this estimate shows very encouraging production in the various crops, and for many crops the production is at the all-time high level. So this is good. And sugar is largely underperformer for quite some time, for last few years. And we know that sugar always passes through some cycle. annual cycle matlab uh, a few years it runs well, afterwards 1 or 2 years of weak performance in terms of uh, production and overall harvesting quantity and all. So afterwards it again gets into the cycle. So this is the natural cycle of sugar. So last couple of years sugar didn't do well. Now we have to look whether everything is uh, going well for them, how ethanol production and bifurcation of ethanol from traditional sugar production impacts the performance. These are few things we need to understand. Companies who are quoting at reasonably low valuation are Dalmia Bharat, KCP Sugar, EID Parry, and Dhampur Sugar. Balrampur Chini, the market leader, is quoting at 23x. In the steel pipe segment, I will it's worth mentioning in the steel pipe segment, Maharashtra Seamless is quoting at 12x compared to Welspun Gujarat at Welspun Corporation at 14x and Man Industries at 16x. Now this Maharashtra Seamless, as I said, like currently this company has exposure in the US, right? Maharashtra Seamless, Man Industries has exposure in Middle East, and Maharashtra Seamless has significant exposure in the US. And in this period of time, US is doing well in terms of the opportunity. There are opportunity size is significantly good in US because there are like do you remember the President Donald Trump's statement uh, that came out after just after election, just after uh, swearing in, after president swearing in. So that was drill baby drill. So the more exploration work, more uh, uh, drilling activities are likely to happen in US, and more drilling activities means more requirement of pipes. So need to have a close watch about the companies, their current position, how they are panning out over there, and what the management strategies, and whether these companies are well placed or any particular company is well placed to capture this opportunity. So if it can capture, any company can capture this opportunity with this reasonably low valuation, can be a good pick. So have a look, need to deep dive into their operation strategy and all. So not worth mentioning every segment. Shipping is very much in the limelight since budget. So here I can see Market Alliance is quoting at 4x and GE Shipping is quoting at 5x. And traditionally, these companies are very low valuation companies. Market Alliance, I'm not very sure about this particular company, but GE Shipping is really a good company. Uh, so how is the current opportunity size, especially looking at the budget? This is something you have to study, you have to take a deep dive to take a call. In the refinery segment, very surprisingly, refineries are traditionally low valuation companies. uh, BPCL and HPCL both are quoting at significantly low valuation of 8x and 12x, 11.7, 8, 12x respectively. So considering the current refinery, the means opportunity in the oil marketing segment, and all these companies are expanding their capacities in terms of क्या बोलता है, in terms of their uh, petrochemical segment, petrochemical capacities, and going up, recently gone up actually. That is the refinery margin, gross refinery margin. Uh, so that these are few things we have to watch, like how these two things are going to play out for these companies. Uh, can be a driver for the performance of these companies, and one can take a call based on these studies. In the agrochemical segment, because this segment is again related to chemical, and chemical space overall in macro sense is not doing well. Agrochemical also didn't do well, barring a few exceptions. Insecticide India is quoting at the lowest valuation among the most of the known players in this particular segment, quoting at only 13x, and Excel Industries is quoting at 15x, the cheapest in the pack. Now we have to study how well poised these companies are to take the market opportunity, and how the interchemical space, including agrochemical, is panning out. Whether the price erosion which was happening has been arrested, what is the current scenario, what is the outlook, how the current uh, pricing policies are going to impact the companies, whether this uh, price erosion has been completely arrested, whether there are green shoots in terms of price increase and all, how these companies are going to increase their realization. Those are few things we need to understand. Just trying to show you. Just have a look at the healthcare segment. Among the known names in the healthcare means, I'm referring mainly, there are like in this list, there are diagnostic to clinics, hospitals, all are there in this particular list. I'm referring only the hospital companies. Narayana Rudalaya is one of the cheapest among these, mostly among these hospital operators. So it's quoting at 41x at this point in time. Yes, it's quoting at 41x, which is cheapest among the known hospital operators. I'm not saying all hospital operators. There are some other names which are not that much popular. So they are also, they may, like those companies may be quoting at the lower valuation, but in terms of their operation and all, I'm not very sure. But Narayana Rudalaya is among the known hospital operators quoting at the cheapest valuation, and the stock price is flying also. So there are many sectors. I'll not be able to cover up everything in a single video. So this much is enough in this particular video. So before my closing, I have a disclaimer that the stocks which I have referred here is not a buy sell hold recommendation. I have referred for your further study. You may take the help of your registered advisor as well for taking a decision. Anyways, that is it in this particular video. So let's meet you in the next video. And don't forget to subscribe my channel and like the video if you really find it valuable. Thanks. Bye-bye for the day. Take care.